Welcome to The Explainer. Today, we're diving into a massive, real-world mystery right in the middle of the American healthcare system. We're tracking a totally unexpected, drastic shift in enrollment numbers for the Affordable Care Act, or ACA. You know, healthcare policy can sometimes feel a bit dry, but when you really look at the data here, it tells a fascinating story about politics, policies, and the everyday lives of millions of people. Let's jump right in and look at the evidence. 5 million. I really want to emphasize the sheer scale of what we're talking about right off the bat. In just a single year, 5 million people have basically vanished from the ACA healthcare marketplace. To put that into perspective, that's roughly the entire population of South Carolina or the whole country of Ireland just suddenly dropping out of the system. It's a staggering figure, and it immediately begs an explanation. The federal government recently dropped a report, and the contrast is pretty wild. Back in 2025, ACA marketplace enrollment hit an absolute record high of 24.2 million people. Fast forward to 2026, and current enrollment has plunged down to 19.2 million. We're talking about a sudden, steep cliff. So the big question we have to ask as we try to make sense of this 13% drop is, well, where on earth did 5 million people go? I mean, how does a system lose over an eighth of its participants seemingly overnight? To figure this out, we need to break down the numbers and really weigh the competing theories about what caused this mass exodus. Let's start with the mechanics of the drop itself, because the federal data lays this out super clearly. It basically happened in 2 steps. Step 1, going into 2026, initial signups were just lower. About 1 million fewer people actively picked a plan compared to the year before. But step 2 is where the real damage was done. A massive 4 million people either actively disenrolled as the year went on, or they just stopped paying their premiums and lost their coverage. So the vast majority of these missing millions actually had plans, or at least tried to, but ultimately walked away or were forced out by non-payment. Now, exactly why they walked away is the subject of a huge political debate, and we essentially have 2 competing theories here. On one hand, the Trump administration and the Paragon Health Institute, a conservative think tank, theorized that the 2025 record numbers were actually inflated by massive fraud, and this drop is just the result of them cleaning up the system. On the flip side, Democratic lawmakers and a lot of health policy experts argue this drop isn't about fraud at all. They theorize it's entirely due to skyrocketing costs from the expiration of enhanced premium tax credits. So let's impartially look at the timeline and what the experts are saying to really understand both sides of this incredibly complex situation. Let's trace the timeline on that costs theory based on reporting from NPR. The sequence of events is highly specific. Back in October of 2025, Democrats and Republicans hit a stalemate trying to negotiate an extension for those enhanced premium tax credits, the ones enacted during the pandemic to make coverage cheaper. That disagreement actually sparked a government shutdown. By the end of 2025, with no deal reached, those enhanced credits officially expired. The result? By early 2026, average premiums essentially doubled. Talk about a rapid financial shock to the system, right? To help us evaluate all this, let's bring in some outside insight. Cynthia Cox is the director of the program on the ACA over at KFF, which is a leading nonpartisan health policy organization. Now, she acknowledges that fraud is a very real problem in any insurance market, but she points right back to that timeline we just talked about. She says, while the Trump administration attributes this drop in enrollment to their attempts to address fraud, this coverage loss happened at the same time millions of people faced double or even triple-digit increases in their premium payments with the expiration of enhanced tax credits. For her, the timing of those massive premium spikes is absolutely the key piece of the puzzle. Stacy Pogue, a senior research fellow at the Georgetown Center on Health Insurance Reforms, is on the exact same page when it comes to the sheer scale of the drop. She flat out states, I don't see data that point to that conclusion that a 5 million person drop can be explained by allegations of fraud. Instead, she points out that the evidence heavily suggests people are just making really difficult choices based on what they can realistically afford every month. According to these experts, the math just points to people's wallets rather than wide-scale criminal enterprise as the primary driver here. And that's absolutely crucial, right? How this macroeconomic data hits everyday families. We're dealing with an economy where inflation is already squeezing budgets tight. Add doubled health insurance premiums on top of that. The reporting shows everyday people are being forced into agonizing life choices. We're talking decisions about family budgets, changing jobs, even delaying marriage just to navigate these massive new costs. When your premium doubles, dropping coverage isn't really a choice anymore. It's a matter of raw financial survival. Also, if you're thinking this is just a blue state or red state problem, think again. KFF data actually shows that over half of all ACA enrollees live in Republican congressional districts. This clearly illustrates that this financial squeeze crosses all political lines. The universal pinch of these expired tax credits and doubled premiums is being felt by Americans across the entire political spectrum. So, what happens to the market itself when 5 million customers disappear? Well, the vendors definitely take notice. We're actually seeing insurance companies starting to flee the market. Major providers, including Cigna, have already announced they're dropping out of ACA markets for next year. As KFF points out, it's pretty simple math. Fewer customers makes the market significantly less appealing to the insurers. And that brings us to a phrase you literally never want to hear in health economics, the death spiral. It sounds dramatic, but it's a real condition where healthy people who feel they can take the risk of going without insurance drop their coverage because it gets too expensive. That leaves behind a pool of enrollees who are generally sicker and need more care. Since that pool is now way more expensive to insure, companies have to raise premiums even higher. That new price spike forces the next tier of healthiest people out, and the cycle just repeats, spiraling until the whole market collapses. So healthy people leaving the ACA is a massive red flag. But hey, before we hit the absolute panic button, KFF does offer a measured assessment. Cynthia Cox says, we aren't in a death spiral just yet. Why? Because even with the loss of 5 million people, you still have 19.2 million people buying coverage. And for now, that volume is keeping the markets afloat. But the danger is absolutely still there. If this trend keeps up and certain areas lose all of their insurance providers, that is exactly what a death spiral looks like in the real world. Which leads us to our final and honestly most concerning piece of evidence. Georgetown's analysis of early insurance rate filings for 2027 shows that rates are on track to go up again next year. The premium hikes aren't over. So if prices keep climbing, forcing millions more into those agonizing financial decisions, we have to ask, who will actually be left to afford the ACA if the spiral continues? It's a huge, critical question about the future of American healthcare and one we will be watching closely. Thanks for joining me for this explainer. Keep asking questions and always follow the data.